All right, got this crude oil trade. I'm going to get in here. If it triggers in at 40.39, we go to 27 and 21, the second and third target. We'll have to make a new low of the day if it's going to get to that 21 level. And the stop is way up here, working around some key levels. 56. So we'll move that down a little. All right, let's see what happens with this one.
Order filled.
Well, there it goes. Kind of like this trade because you could see that our EMA tried to meet, the 50 tried to meet with the 200 here and then failed and started to roll lower. We've already retested it, so we'll see if we can get another leg down here. See the target's right down in here. And just to look at what crude has done, pretty choppy morning, but failing to get higher, hitting that 200 EMA, the 50 unable to get to it, now starting to roll. Hopefully it's going to come down and test the lows, and we'll see if it can break through. By then we'll already be in a risk-free position, so kind of trade I typically look for. You can see there was a nice trade up here showing in gray. That was a really nice trade, but I have a filter turned on, and you can see it actually filtered this trade out, so I didn't take it, although of course in hindsight it was a great trade, but those filters work pretty well for the most part. And it's a typical counterpunch trade, a little small, but then crude oil's been trading so tight, maybe we'll grab a trade on another market. Pretty choppy morning. This is tax day, April 15th, and it's notorious as being a hard day to trade. Okay, I've gotten to money management, so I could lock in my one tick. So now I'm in risk-free, and I either make my profit or I make one tick and cover my commission. One way or another.
Order filled.
There it is. There's target one. And you can see the stop showing. Let me make this bigger so you can see it. The calculator knows to move that stop down. So now we're just going for target 3, testing those lows of the day. Right down here at 24. And it may not get there. Now I could just eliminate this target and try to trail for a larger move. And I might get it. But just judging by kind of the way crude has been trading lately, I just think that getting a nice fixed target at target 3 over time would be a little more productive at crude prices trading at these levels. You know, once you average out a bunch of trades. Monday, we'll be rolling over this May contract to the June contract. CLM16 will be the contract starting Monday. All right, look at that. There we go.
Order
and hitting
filled.
target 3. Wow, what a nice trade. And the trailer would keep going, so it's possible this price wants to go lower and lower. But remember, we got out down here. And the trailer's up here. And we could just go ahead and continue watching and see if the trailer would have picked up more. Could have traded it with 3 positions, I suppose, and had the best of all worlds. And see it coming up, pushing on that stop. It's missing it by 1 tick so far. But that stop is up here. Near target 2. I decided on that fixed target at target 3, so looks like it's about to hit it. It might not. There it goes. So it looks like that was a good decision going to target 3. And, you know, maybe that you call that a nice little scalp trade or whatever, because clearly you can see how small these bars are. The trades are small too. This was 12 ticks to target 2. It's $120 a contract, and this is, I think it was 18 cents. Still early in the morning today for Friday. Had a long 2 weeks, so it's nice to be able to just trade casually without trading and calling a trade room at the same time. All right, so there it is, see? And this is a trade that, you know, was a trade of opportunity. It wasn't really the trade plan trade because the trade plan started much earlier this morning. This is just, I noticed something that I tend to like, situation that tends to work really nicely. I'll just kind of recap it. Usually when the 50 EMA starts pushing up towards the 200 and you get into this area here, you want to avoid going short. You want to kind of ride the yellow brick road up. And you can see that was a nice trade, but I missed that because I was not at the computer. So I'm looking, and I'm looking at these two, and I'm going, yeah, those could work. They're really small. You can see they're just, 9 ticks in the middle target. I'm not too excited about that. The next one over was a little bigger, and I was ready to take it. And then I saw that it was starting to roll. Remember, this is a testing area right in here. The 200 marks the testing area, and with the 50 pushing up, if it keeps going, it could set up a rally, right? The 50 can end up crossing up over the 200 and you get a nice rally. But right in here is an area where it could also fail. And so when it started to roll in the other direction, I was tempted to take this filtered out trade. But those could be false alerts, right? Because if it is going to keep going up, you don't want to get in, we call this the squeeze zone, right? It's not the John Carter squeeze zone. This is where the price gets kind of pinched between the two EMAs. But when I saw it starting to roll, now it's starting to roll, and I can see my high trend is down. It's high trend indicator. And then it came up and retested and started coming down again. I'm thinking, okay, nice action move down, nice reaction into resistance. So that could set up a second leg down. Since it failed to get higher, good chance it's going to go lower. And so the lines are kind of speaking to me and telling me, giving me this information. But then I get the setup. Still kind of a small setup, but it's still better than these little ones up here, right? It's acceptable. And look at target 3. I mean, that's a perfect target. It just barely poked through before going higher. Now, of course, it's going lower again and no real follow through. Maybe it's going to find a new range to trade in. Maybe it'll ultimately work lower. It could go higher. Who knows? But I don't care because I'm already in and out and done with the trade. And just using the counterpunch, letting price action kind of tell me what's happening, and realizing it could still go the other way. I mean, price is going to do whatever it wants, but just, trying to put the odds on my side by looking at some typical behavior that I'm just familiar with, that I've seen over and over and over and over. And I think that's one of the keys to trading success is you spend enough time with your charts and enough time with a particular market, and you see certain patterns. They repeat themselves. And after you've seen them enough times and practiced them enough, you learn how to trade them. And you can maybe trade outside of a strict, rigid trade plan like we usually do, and instead take a trade of opportunity. And maybe you even make that part of your plan once you're well practiced and you can measure your results. So, of course, you always want to track these trades in your spreadsheet. We use a pre-programmed spreadsheet. It's pretty powerful. And it lets us really analyze our trades, and it's something I recommend everybody do. There's no better way to learn. But anyway, I'm talking too much. I hope you enjoy this video. And this is TJ with the Counterpunch Trader. I'll see you next time.